Hello everybody, it is Thursday the 5th of November 2009. Hope everyone is doing magnificent, and I felt it was going to be an awkward day, and true enough it actually was, as the markets gapped higher and proceeded to continue higher. And I never seen anything in the dollar to signify it. Yes, bonds were selling off, but nothing at a rate to signify that high of a gain. And the economic news, a lot of the news you need to hear should have once upon a time before it starts. More on that at the end of this video, but there wasn't that much to signify it. So I felt at the start of the day, man, there's just something going on behind the scenes, and I know this is to be the case, but at this point it was really bothering me. Maybe it was because of what I felt was going to happen with UUP, or the timing of it was that on the same date the dollar index ETF, or the fund that is designed to trade with the dollar, had a lot of unusual happenings. As a little after 1 o'clock, the dollar ETF halted. The trading was stopped. Bloomberg reported they ran out of shares, and the Deutsche Bank had to do whatever. And the trading resumed at 1:52 p.m. Eastern with a mass amount of volume and volatility. We see the dollar go up 1.5% on its first minute alone. A little after a half hour later, it was up over 3%. Finally, I think it went back down to that 1.5% gain mark. Meanwhile, the US dollar wasn't doing much. The US index up 2 cents during this time, which is not much for a $70 share. That was a little unusual, and I don't know why the gains were there. If you just bought recently, I'm guessing you may have got lucky. Maybe this will signify something. I don't know, but I was even reporting before how I was seeing some indifferences with these ETFs, and how they're not tracking it well, especially the ones with the single short and single longs. The XLF, SEF, they're the funds for the financials. SEF is a single short, but it's making new lows, which it shouldn't be. When XLF last year, when S was like $24, $25, $26, therefore it should be well above those lows, and they're not. And with the dollar, I was noticing that it wasn't working properly, and you can even see that today when on the 23rd of November 2007, the US dollar index closed at 75.04. Right now it's about 75.70 something, so up a little bit. Yet the ETF UUP, which had the volume and volatility, is still down 1.5% in that time, meaning they were down about 3 before. UDN, the short, is down about 8% over that time and change, so working pretty close to the way that it should be. Now, I want to talk about fiat money. The term fiat means that it's not backed by anything. In 1971, Nixon goes off the gold standard. Most people are familiar with that. Fiat in Latin means let it be, just let it be. So Nixon says, we're going off the gold standard, we're going to just print it like we will, we'll just let it be. It's pretty much how it's been, and Big Steel Guy, or Aaron, who makes some great videos, was mentioning in his video today, and I'll make a response to it, that it's like a religion. And it really is, because religion is all about faith and belief. And you have faith that the dollar is going to hold its value, or at least have something of fair value. Inflation is why you say that, of course. Something you expect to trade off whenever you need, something you expect for your debts. That's what the faith is, and the belief that it's going to stay for real. Well, this is a time to listen to REM, Losing My Religion, because I don't have much faith or belief in it anymore. But moving on, people have asked about necessity items, or not necessity items, of items to invest in, and I have been talking about necessity items. The key things, and Aaron brought most of these up, is that Project 2050 or after the markets close mention the basic necessity items, which are food, clothing, shelter, education, healthcare. So if you're looking to invest, those are the key things to invest within. As far as silver is concerned, that is a tangible asset to be purchasing those particular assets, guns and ammo, to protect those assets, if anything. Also, I seen in an article they're expecting commercial real estate to bottom out in 2010. When I read this article, that's the first thing I could think of. Why are they not starting this off with once upon a time? So they're already admitting it's going to get worse. I mean, that's pretty inevitable. But to say that it's going to be bottoming out now is like saying that the recession will end in the summer of 2008. And they did say that, didn't they? And they didn't say what's upon a time to start it. Go figure, eh? Peace out.